broadly, what are you seeing in terms of demand? What's the outlook for demand going into next year?
Look, it's a great time for EV charging infrastructure, as you can imagine, with the tipping point having been reached. And in fact, for almost all of the OEMs that are building charging infrastructure, we're finding that demand is outstripping supply. There's quite long lead times right across the industry, and that's because of parts shortages due to COVID, but no cancellations and very, very strong demand, the strongest we've seen in the company's history.
Supply chain issues, availability of raw materials and resources still so key, particularly when it comes to infrastructure and battery making. Is that something that's affecting your business? And what are the I guess, individual problems that you see going into the new year?
Yeah, absolutely. Like everybody, there's a mixture of the component parts shortages, which you see globally, as well as freight. So because we manufacture in Australia, we've had significant issues with freight. Initially, air freight was impacted, but then sea freight was also impacted. And that's brought forward our plans to open a US-based factory, which we plan to do in Q3 of next year. And then there's been a series of shortages in this industry that relate to peculiarities to the components of the chargers. So, for example, the leads, the cables that you use for charging. There's been some unusual raw material shortages, some special film that's used in EV chargers, and of course semiconductors. Although Tritium was lucky, we do have a long-term semiconductor supplier who gave us the heads up, and we ordered a year's worth of the semiconductors before that really kicked in.
Jane, David here. I'm also then looking further long term, and I can't help but notice just your forecast here for growth. I mean, 84 million, that's dollars 2021, that's the estimate. It goes up to almost 1.5 billion in about 5 years. What needs to align policy-wise, supply chain-wise, cash-wise for you to be able to achieve, what, 18x growth?
Yeah, absolutely. Effectively, we actually just need to maintain our current market share. So we currently have 15% of the North American market for fast DC chargers. We have 20% of Europe, and we have over 75% of Australia and New Zealand. So if we just maintained and didn't grow that market share, and the TAM reached what Bloomberg NEF is forecasting, then we would hit those numbers.
In terms of the cash you need, though, for that, I mean, being able to maintain it, that's basic math, but it's also going to be a much bigger market, and I would imagine you'll need a bit more liquidity and working capital to be able to do that.
Yeah. Absolutely. So we're forecasting needing 68 million of USD cash to the pro forma balance sheet to be free cash flow positive by 2023. But with the SPAC that we're entering into with Decarbonisation plus Acquisition Corp 2, we need about 274 million of cash to come out of that, depending on redemptions. But that will be a fortress balance sheet for us. We need the 68 to get to positive free cash flow.
Jane, when it comes to policy here in Australia, what would you like to see from the government and individual states in terms of being more encouraging and incentivising the take-up of electric vehicles?
Yeah, look, we don't actually encourage, incentives and tax relief to a huge extent. What we actually require from government is just very clear statements in favour, and that can be targets. It could be just as clear as making very clear to the public that electrification is coming, that internal combustion engine vehicles are now an obsolete technology. It's not a great investment for you when you're spending what can be multiple years of an ordinary family salary on such a large purchase. And so just that very clear communication that there's no competing technology. This is the technology that's now hit the tipping point. All of the EV OEMs are investing billions of dollars in EV battery tech and opening factories which are going to build EVs. And so long as the government very clearly says that, that's actually really all that's required. Now, incentives, of course, will help you go faster. So there's no downside to having tax incentives and having some type of relief, but it's not necessary to get the EV uptake that we need.
Jane, just very quickly, final question on China. You're operating in 41 countries. Your presence there and your outlook for the market?
Yeah, look, in terms of China, that's a market that absolutely is dominated by Chinese manufacturers. And quite understandably, it's quite a different market to where Tritium's operating. So Tritium has a charger that's really at the perhaps top end of the market. So sells well in Europe, in North America, in the high-cost Asian countries. So we've actually got good penetration into Thailand, working in Singapore now with boots on the ground in Singapore. We expect to sell into Japan, South Korea, and of course, Australia, New Zealand. But for India and China, those are less target markets for us. There we hope to operate in the five-star hotels, the high-end developments, and potentially the car showrooms.